So in this video we are going to learn exactly how I pick my trades, the same way, day in, day out, rinse and repeat. Every information you need to be able to take your first trade using my exact system will be broken down there. I teach as if I'm teaching a primary school child trying to learn Forex. So do well to watch the video till the end. I digressed to talk about psychology, how you should take your trades and other things and get the best out of your trading experience. Please watch the video to the end. Subscribe to the channel if you have not. Please click on the like button and then make a comment, whatever it is that you do not understand. I am willing to make a video to help you. Have a wonderful trading week and enjoy the video. Hello, good morning everyone. So today is Tuesday and I want to share with us the setups that I have for today. So not long I woke up and I was just going through the market looking for potential setups. But before we do that, this is the update on the trades that the videos I made, the trades that I've taken. Last week Friday, for 2 days I think I uploaded video on a setup on gold, and then yesterday the price got to our entry point, and then I entered the trade. I was a little bit late on it. This is where I was supposed to have placed my pending order, right? This is where I intended to enter the market, but by the time I was free and checked my chart, price was around here, so I took the entry. So this is where I entered invariably and my stop was here, but now I have moved my stop down a little bit. Okay, so this is how the gold trade that I have talked about, I think I've made up to 2 videos on it. It was a very clean setup. This is how it is going. Okay, so anything can happen in the market, but it was a very clean setup. I made 2 videos on it. Just go check just 1 or 2 videos before this particular video you are watching. You see everything. I explained everything, what I looked for, the same thing we look for every day. If you've watched 1 or 2 of my videos, you should know what we always look for. Then later I saw the shape of this old high, and I saw price turn around and break structure around here. Are you seeing it now? So I saw that shape of liquidity, shape of an old high. I saw a break of structure here. Maybe we can mark then tell, but let's just use this. I saw a break of structure here. I saw a break of structure here. I just knew that okay, I have my trade. How do we do it? We now go to the 15 minutes time frame. Okay, so I went to my 15 minutes time frame and then I spotted this order block here. I explained how I picked my order block. I explained everything. That's how I do it on this channel. So I saw that, and I saw my inducement. I saw the inducement here. I saw that as my inducement. Already, this was one inducement already. Then I saw the price wasn't satisfied. It came down when it was going before getting to the entry. Then it gave us another inducement. Induce early seller. I explained everything. Then price came, tapped, and dropped. Okay, so and dropped. Okay, so that was the setup, and you can see that it is going nicely. I am confident to put up my setups even before they play out, to make videos on them, and I have always said the reason why, because I make these videos and put them up, which you rarely see people do. I do it because my aim is not to win every trade. My aim is to what? see my setup and take them. Okay, the outcome is not in my hands, so that takes out that fear from it. Once you see your setup that meets your criteria, I take it. I using it now, and then I risk little. I don't risk more than 0.5% per trade, no matter how good it looks. I don't risk more than 0.5 per setup, no matter how good it looks. Okay, because you can turn around. I've seen so many nice setups turn and not go well. Okay, so I don't risk more than 0.5 because just as I've always explained, my emotional mind is much stronger than my rational mind. So I don't want to engage my rational mind with my emotional mind, which is much stronger. I don't want to engage them in a fight because the fight can never be fair. So I don't risk more than, and I don't risk any amount that will make me emotional. You see, so that means that my profit will not be an amount that will make me emotional, too excited or whatever. So everything is moderate, and then I allow compounding effect to work for me. Okay, and then my trade, I take them in sample sizes of 20. I use them, so I don't try changing anything, adjusting anything until I've gotten a sample size of 20 trades. Okay, then you get to watch your edge play out properly, and then I don't sabotage my process by cutting my wins early. I'm using it now. I just allow everything to play. Take it easy. But you see, when you have reached too much that you'll be scared. I'm using it now, or you'll be too excited about the games because you need a very big loss and then you close the trade before it gets to where you're supposed to get. I'm using it now. Or when you not risk too much, by the time it starts going against you, you're scared because the amount is looking big. Then you cut it short and then market to get few pips your stop loss and turn. Go to take profit and then you now be regretting. Are you seeing it now? But when you just risk normal, nothing excites you, nothing scares you out. Okay. So I have a setup for today. So I was just scanning to, okay, yeah, there's one other setup I planned to enter if price gave me. Price did not tag me in. It's JPP 225, Japanese 225. So I plan to enter there. Price moved without me. I did not chase it. You can see it. So I was planning for price to come and take out this engagement here. I was planning for price to come tap into this. The same setup, everything I explained is the same thing. So price did not do that. It just came close to it and moved up. So I left it. So you can see it, price moved this far. So immediately it did that. I just ignored it. Okay. So this, you can see how far my price moved. It didn't get to, and then it turned round and closed. And already, why I didn't even bother doing anything, I was seeing a setup coming already, which even played out, but I didn't want to take it because the market was facing the upside. And see, this could have been a setup too. Market took out this side, turned around, broke structure. I using it now, but since this other block was still there, I wanted this to be taken out first, which it did not do. Okay, market knows what it does, so I didn't participate in this at all. But if I had wanted, I would have caught a good trade around here. I'm using it now, but I did not participate in that. Okay, I think I can now delete all this because I was looking to make a video to give you an update of how it went. What other trade did what other setup did I share with us again? Oh, beautiful. I think I remember the one okay, I didn't see any other one. Okay, now let's go to the setup for today. Let's go to the setup for today. Just remove all this. Let's go to the setup for today. GBP USD. So I'll just scan it. Okay, yeah, there's this other one, Euro JPY. We're not tagged into. Market did not come to our level. Euro JPY. JPY. You can see it. So yesterday I was expecting price to come here, give us an inducement, and then come tap, but it never did. Okay, so and I don't go about placing pending orders. No, until market gives me inducement, an inducement break of structure, I won't place any pending order. So I don't forget that I place an order and then be taken out or whatever. No, the market is very random, so you should seek control. You think you can control them well. You can control your risk, control it well, and your risk control your emotion. So the cascade of events, control your risk. If you control your risk properly, your emotions will be in control. If you control your risk properly, you won't want to revenge. Are you seeing it now? If you understand that the market is stronger than you, understand that the market is stronger than you, it is richer than you. So don't try revenging on someone that is stronger and richer than you. Just let go. Clear your head. Give trade. That's why they tell you take 2 trades and just forget about that day, because maybe you want to take more trades after losses. You are not thinking straight. Are you seeing it now? So let's go. Let's go to GBP. So I saw a straight clean, very clean trade setup on GBP. So let's run the analysis together. Okay, let me clear all this. Let's run the analysis together. So what do I want to see when taking any trade? What are the things I want to see? I want to see markets do what? Clear an external high. And this is an old high. So I want to see markets turn around and clear it. Okay. So let's mark that external high. I want to see it clear it. Whether it clears as liquidity or as a breaker block. I've explained this several times. I've explained this several times. I want to see market come and clear an old high, which it did very beautifully here. The market came and cleared that old high. It cleared that high. So what else do I want to see? I want to see market turn around and break structure. I want to see market do what? Turn around and break structure. So now looking at the market structure here, market went up, right? Came down. Are you seeing it now? Pushed this now. So let's leave that, pushed up to this point. Clearing that structure. Then came down. Are you seeing it now? Pushed up, came down, then came up and dropped. Okay, breaking structure. Are you seeing that? Breaking structure. What structure did it break? It broke this low here. Are you seeing now? This low that could not make a new high. This failure to swing broke that low. Good. So what are the things that we always look for? On 1 hour time frame, I want to see markets clear an old high, pass through an old high. I want to see that. Then I want to see market turn around and break structure in the opposite direction. You understand? So I want markets to come clear an old high, turn around and break structure in the opposite direction. So now I'm going to mark my break of structure. Now when market turns around and breaks structure in the opposite direction, something is responsible for that push that broke structure, and that thing is an order block. So after I've seen the break of structure, I want to look at for the order block. This is the order block, this red candle. And how do I always want my order block to look like? I want the tip, the highest part of it, to be higher than the candle before it, higher than the high of the candle before it and after it. And the order block can be any color. It can be a buy candle green or a sell candle, red, any color. I just want the tip. I want it to be the candle where the push started, and the high of it should be higher than the candle before it and after it. Do you understand? Very simple. So I'm teaching as if I'm teaching in primary school. This is how I explain it every day. Please like this video, subscribe to this channel, encourage you so you not come to go and not find us making videos again, and then share, make a comment. Okay, make a comment, anything. I'm going to give you the honor of explaining and making a video just because of you. Okay, so let's mark our what break of structure and then mark our other block. So let me mark our break of structure happened here. Okay, it's actually here. I made a video on how to mark market structure properly. I think it's one of the first videos. Please do well to watch it. You will learn a lot from it. Okay, so this is break of structure. Okay, and what caused that break of structure? It is this other block here. Okay, so let me mark that red candle. This other block here. This other block here is because of that break of structure. Make it transparent so that you can see it. Are you seeing it now? So what are the three things again? What are the three things we want to see on 1 hour time frame? We want to see market come clear an old high. We want to now see it turn around and break structure. On 1 hour time frame, we also want to see the other block that caused the break of structure. And that other block, the highest part of it should be higher than the high of the candle before it and that after it. So I haven't done these three things on 1 hour time frame. I will scale down to 15 minutes time frame. Now once I get to the 15 minutes time frame, what else do I want to do? I want to refine my other block to the 15 minutes time frame other block. Now where is the other block that we marked? Look at it here. On 1 hour time frame is the whole of this. Now looking at it, now this is the 15 minutes time frame. You can see it 15. That's the 15 minutes time frame. You can see another block proceeding this green candle. Are you seeing it now? That is the other block. That's where the actual move started from. That's where the actual move started from. So we're going to go ahead and refine the whole of this thing to this green candle. Okay, we're going to refine the whole of the stuff to the green candle. So I'll mark this like this. But I will just include this little gap before it. I just bring it down. But actually that is the other block, that green candle. But I don't want to hear that I got a mistake too. So bring it down. Including that small gap. You know the gap I'm talking about. So let me zoom out and show you. So this green candle is the other block. So I was supposed to just mark the green candle. But I don't want to hear that, oh, there was spread or whatever. So I just included the gap. In case the market wants to use the gap around it to go. Are you seeing it now to continue dropping? So I haven't marked that. So what have I done now? On this 15 minute time frame, I came first thing is to refine my other block to the 15 minute entry. Are you seeing it now? Very simple. So what's the next thing I want to see inducement? What do I term as inducement? I want to see that as price was returning to the other block. That is returning to this other block. Price was returning because other blocks where price will return to them. Why will it return to them? This other block is where large orders happened. Now the people that pushed these orders, all their orders were not fulfilled. Something is remaining. If it was a sale of $500 billion they wanted to do, the liquidity money in the market was probably only $250 billion. It moved like this. So it's still remaining 250. Are you getting it now? So price will come, they will look for a way of making price to come back to complete their orders. Are you getting it now? So that's why these other blocks serve as magnet attracting price. So market will always want to return to them. Are you seeing it now? Another reason why price will return is that the movement was very fast and it caused displacement. These gaps, it created gaps. Created gaps. I've explained this in to using food items and so many things that you see every day. Go through my video. As every video I make on this channel is packed full of gems that will make your trading very simple and it will turn you to a very good teacher too. Go through my videos, watch them several times. You become a very good teacher and you do something like this too. Okay, so price will return there. One, because there are orders that have not been fulfilled. Two, because market moved very fast, leaving gaps. So price will always want to return there. In one of my videos, I explained that if something was selling, let's say Gary was selling for 200 naira per mudu, and something happened. Or let's say Gary was selling for 1,000 naira per mudu, and something happened, and the price dropped drastically to 200 naira per mudu. There's a huge gap. The change, the difference is too much. So market will definitely adjust. We start adjusting upwards to fill in that gap. Okay. So market is now trying to return back. Are you seeing it now? Trying to return back. That's what market will do, to try to return back to the other block. Now, but it will not just return back like that. So while market is returning back, what do I want to see next? So on 15 minutes time frame, sorry for the digression, I marked my refined order block, right? So we're expecting market to return back to it. While market is returning back, what do I want to see? I want to see market going close to it, give us a fake market structure sheet. Before getting there, it must decide on its own to turn back, decided to turn back sheet structure. So that people that are not patient enough to wait for it to get there will say, this market has started selling. Are you seeing it now? So they will be deceived into beginning to sell immediately. Some of them will come and put their sell orders around here that, okay, market will return here and sell. Some of them will put their orders in this fair value gap above this Asian high. You say, okay, market is coming here to tap into this fair value gap here in this Asian high and sell. So what market is doing here is that it is engineering liquidity. It is generating liquidity, deceiving people, because everybody, people that will trade around here, their stop losses cannot be here. It will be too high for them. So they will put their stop losses around here. Some will put it here. Their stop losses will be around here. Are you seeing it now? So that when market comes back, when market comes back, it's going to suit their stop losses. Now, this their stop losses is part of the fuel that market is gathering, is liquidity, money. Because market has looked at it that even if it comes back here by now, the remaining 250 billion that it needs to push down is not complete. The market may not have it for them. Their orders may not be fulfilled. So they'll try to deceive a lot of people to go into sell, so that when they add all their retail traders, all their monies around here, if they add it and pay to the pending order, the amount that they have to push down this thing, to push down price from the other block, the market will be able to move down smoothly. Are you getting the point now? So going back, first thing on 15 minutes time frame, we will refine our entry to the other block on 15 minutes time frame. The next thing we want to look out for is inducement. Market making people to sell early. Are you seeing it now? So let's draw the inducement again. I want you to understand this, and that's why I'm repeating. Market goes up, is returning to it, comes down, goes up, comes down. While returning to it, before getting there, decides to shift structure and start selling. And this is inducement. It is inducing early sellers. Inducement is when you make something to happen before time. Some people induce ripening. They buy fruits that are not ripe and put some things to make them ripe faster. That's inducement. When a woman is in labor, it's supposed to be 9 months, and then maybe the something happened, then they want to induce early labor. Then they do it around 8 months or before they maybe one health hazard. So that's inducement. When you make people to do things, when something happens to you, do something that makes people do things before time. So that is that inducement. So we have our engagement here. So what are we now waiting for now? We want market to just come back. We want market to come back. Tap here. Tap into the other block. Excuse me. We want market to come back. Tap into the other block. Tap into this other block here. Sorry, my device is hanging. Okay. We want market to come back. Tap into this other block here and drop. Are you seeing it now? So that's simple. So let's mark our engagement. So this is engagement. This place is engagement. Engagement. I already prepared those tools, those annotations. Let me do it to the top. If you don't know how to do these things, if you're interested in it, I can also make a video showing you how to do all those. And then our engagement must break structure. We must see a break of structure that convinced people that the market is selling. I think of people even took that trade and they are making money already on it. But if they don't get out, the market is going to take them out. So the engagement has to break structure. So we have an engagement break of structure here. And this is how I do it every day. Go through my videos, you see them. You see it. And this is when I came across, from backtesting on a lot of things, I came across this system. This is how I teach it every day. Because that's how I trade. I won't come and teach you what is trending. Because I want the algorithm to favor me. No. I'm teaching the algorithm the kind of people I want to come to the channel, the kind of way of trading. I believe with consistency, the channel will blow up. Just for reference purpose, we are sitting on 27 subscribers now. But I'm sure that when a lot of you come and meet what we are doing here, it's going to blow up. Okay, so just be patient in everything you do. Okay, so let's mark our engagement break of structure. Let me align it to the bottom so you can see it clearly. Engagement break of structure. Let me put it in the center. Center. Okay, so that's an engagement break of structure. So we have everything we need. So all we are just waiting for is for price to come up. We're just waiting for price to come up, tap and drop. Now another thing that price could do is that it could come here, it could come up, it come up, come close to it, come closer to it, and then give us another engagement. You can do this, and then before it goes up, taps into it, then drops. Are you seeing it now? Are you seeing it now? So market can do this for us. Don't be surprised if it does this. Okay, just looking for liquidity. The market is just looking for liquidity. So this is the setup, guys, for GBP USD. So if market gives me this, I'll take a new trade today. But if it doesn't, I'll just stick to the gold that is already going in profit. Okay, so this is how we trade every day. Just as I see in every of my videos, the market is very random. You cannot be random too. You have to have one particular way you enter the market mechanically. That's the way you beat the market, irrespective of the outcome. This trade can end up as a loss, and it won't bother me because I've executed my strategy. I use my system to the latter, and I'm using. You can see how beautiful this trade looks. I'm not going to use more than 0.5%. Are you seeing it now? So, not emotional in any way taking the trade. So, Let me extend this. So I'm going to have an entry here. Okay, stop loss. I'm good now. This is where I'm going to place my stop to just be on the very safe place. Place my stop here. Okay, that's protected. That's even more than the protected low, but I place my stop there so that if price gets there, then I know I was totally wrong. So I place my stop there. My target is here. It's not just there. My target is internal liquidity. You see, you can see why I place my stop there. Internal liquidity of this range. This is 7 hours. Because if you go to 1 hour time frame, you see, please don't understand how I place my target. Please comment so that I can make a video on it. But what I always target is this swing point, the internal liquidity, the last internal liquidity on a swing point. From here to here is a swing point. Are you seeing it now? Although from here to here is actually a swing point too. But I'm seeing this as a very good reversal. Okay, so from here to this is this swing point. So the liquidity, the internal liquidity before this swing point, this place is where I'm targeting market to come and get to. Are you seeing it now? So it's that simple. Okay, so please do well, subscribe, like the video so that people can recommend it to other people. Like, comment, you just comment, just say thank you, just write something. Okay, all right.